And I think I'm very excited to be back here because it gives an opportunity to take stock and see where the state is compared to where it was when this journey started in 2015, when it seemed like a dream that we could improve the infrastructure and attract more investment into the state and get more growth into the state. And I think the administration of Senator Adeosun has done incredibly well in sticking to the template, and it's yielding results, very visible results, but more importantly results in the lives of the people. Attracted a lot of foreign investment, created a more hospitable business environment, and I think it's exciting. And in terms of the themes for this particular conference, it's very appropriate. Agriculture is still the mainstay of the state. There are huge opportunities there. Industry and of course technology, which is really the game changer, and that's really where there's considerable latent opportunity.
Now, when you look across other states, because I've spoken to a number of guests today, and they talked about how some other states can take a leaf from what Ogun State has done. I mean, if you just think about the IGR alone, 730 million to over 7 billion monthly. So what are your thoughts? I mean, you deal with the states regularly also. What would you like them to take away?
One of the things that we've done was the Fiscal Sustainability Plan, which was a 21-point reform program for states. And one of the things that states were required to do in exchange for some help during the darkest part of the recession was to improve IGR. It's one of the key metrics was to improve their IGR and to actually come up with a plan for IGR that included things like reviewing obsolete tariffs, going cashless, improving the receipting. So we're seeing this replicated across a number of states, and it's been quite exciting to see the increases in IGR across the length and breadth of the nation. And that's really important in terms of fiscal sustainability for the states, because when we talk about not relying on oil, we're not saying that government should cut back. We're saying find another source of revenue, and internally generated revenue for any state is a very, very important part of that.
Okay, let's talk on the federal level now. A few issues that we've been following. The voluntary assets and income declaration scheme, the deadline is almost here, yes. March 31st. Bring us up to speed on the progress so far in terms of those who have come forward and how much the government has been able to recover.
Incredible progress so far. Very, very encouraging signs. We knew that everybody would wait to the last minute, so it's as expected. I was just speaking to the chairman of Inland Revenue here in Ogun, and he said, look, I'm at 500 million already, and it's just a handful of people that have complied. So the signs are very encouraging. For us, it proves that the data, the analysis we did was correct, because we analysed the data and saw that people clearly are under declaring on a massive scale. And so far, I think at federal level, just 226 people account for 20 billion. So if you begin to extrapolate and think about the thousands of forms that are in circulation, we expect that will bring many, many more people into the tax net correctly. It's not just about paying the arrears of taxes that they should have paid, but for us what's more important is being taxed at the right level going forward.
But I know that there's still so many people who wouldn't come forward and probably just want to see if there's a bite, from the side of the fiscal authorities. So come March 31st, what's going to happen? Are you going to name and shame, prosecute?
Well, yeah, I mean, what's got to happen is for personal taxes, many of the states are working on using sort of mobile courts and so fast tracking so that cases don't get caught up in the long legal process, because tax evasion is a very easy and straightforward prosecution. So a lot of states are starting to look at setting up, special courts, quote unquote, that just deal specifically with tax evasion matters. And tax evasion is a crime. And of course, once people are then prosecuted, we feel that we should come out and say, this is the person that's being prosecuted for tax evasion, and this is why. So that it acts as a deterrent to others. But I'm not sure that that's really where our focus is. Our focus really is on getting everybody to do the right thing, because these monies were made in Nigeria. They're made from Nigeria, and it's only fair and right that some of that money is ploughed back into the system to allow all of us to go forward.
So what's going to happen after VATES?
We continue the focus on tax collection. We're going to focus on VAT. We're going to focus on, getting the number of taxpayers up is critical. The figures I recently got from FRS we're now at 17 million. That's a huge achievement, because I think when we came in we were at 13, we're now at 17. But there are 65 million people who are economically active. So there's still a long way to go. There's a lot of work still to be done on the tax system. So VAT is just one of many reforms. The other reforms that we're working on are constant updates to our tax laws. Some of our tax laws are obsolete. We haven't updated them. We haven't come up to speed with different commercial realities. We haven't, for example, got a strategy for taxing e-commerce. A lot of transactions are now happening online. How do we get them into our tax net? So there's constant work to be done on the tax system.
Is that in the works already?
Absolutely. We have a national tax policy that FEC approved. We have a national committee that pulls together the academia, the private sector, the public sector and the collecting agents, and they just constantly have their committee meetings, look at specific areas of the tax law and recommend changes. So the first set are hopefully going to FEC in the next couple of weeks, and then we'll go to the National Assembly. So it's a constant process of upgrading and updating and making sure that our tax laws are not only effective but also ease the convenience in terms of payment.
Okay, let's talk about government debt. That's also something that's made headlines. We know what the federal government, the fiscal authorities are doing, trying to scale back on domestic debt. There's that $2.5 billion Eurobond to refinance maturing local treasury bills to make more way, as it were, for the private sector. Bring us up to speed on that. And there's a lot of talk about the sustainability of that and if it's going to have the desired impact that you desire.
Right. Well, I mean, the first thing to say about our whole debt strategy is it remains incredibly conservative. So in terms of debt to GDP ratio, we're at 21. The upper limit for a developing economy is recommended at 40. Some of our neighbours not too far from here are as high as 60. Some are at 80. So our debt to GDP is very low, and we intend to stay in the low range. However, there is a desperate need for investment, and that investment has got to be financed. And that investment is long-term investment. So rail that will last for the next 50 years has to be financed. And the only way you can finance it is having long-term debt. Roads, our needs to develop roads, our need to develop power, these are long-term assets, so we've got to match them with long-term liabilities. So our strategy as far as debt was concerned was to have more longer tenured debt, which is why we refinanced treasury bills, which were largely 91, 180 days, and moved out to 20, 30 years. So we're matching the lifespan of the asset with the liability. And as you pointed out correctly, by moving more to external debt, we're creating headroom for the private sector. We're also creating headroom for the monetary authorities, hopefully when the conditions allow, to begin to bring down interest rates. So it's all part of a comprehensive strategy.
Kemi.